Okay, hey guys, today I'm here with Sean Seah, Master of Value Investing. And Sean Seah also travel around the world, share the stage with people like Gary Vaynerchuk, Robert Kiyosaki, Peng Joon, correct me if I'm wrong, Mary Buffett.
Yep.
Mary Buffett. Sean also graduated from Nanyang Business School from NTU, so that's why I see him more like my senior. You know, when you are a freshman in school, your seniors always have the answer. That is why when I need an answer, I talk to Sean. We can learn from Warren Buffett, they'll be good. The second best thing to learn from is Sean Seah. I'm sure that a lot of people know you already. Sean, can you introduce about yourself on how do you get started in your stock investing journey?
I'm not sure whether a lot of people know me now. I'm a Singaporean, and
I'm sure a lot of people.
what happened? I started so-called dabbling into stocks, right, where I was a little bit tired at work, I would say. Like, I was thinking, wow, is that what I really want to do for the rest of my life? So I decided I need passive income. I read books like Rich Dad Poor Dad, quite a lot of wealth development books. I opened an account, I bought some stocks, lost a lot of money, lost my friend's money, and that's where I realized since I lose my friend's money, I must find a way to make it back. So I really got started that way. It was initial quite a painful journey, but it's worth it. Every journey initially has to be a little bit uncomfortable. Yep.
Long story short, that is how Sean started
Yes.
in his investing journey. Personally, for me, in my first 2 years, I blow a lot of accounts. A lot of accounts. I can't even count it in my own fingers. But the good thing is that when we make a lot of failures, we blow a lot of accounts, that is when we learn best.
Right.
What is the best lesson you have learned from your own investment journey?
The best lesson is do your best not to blow accounts. Okay, this is a bit counterintuitive. When you get started, granted, you will sure blow some accounts. But one thing that I was speaking to a lot of brokers all over the world, right? Every one of them, when we discuss this topic, they say the same thing, you know. So what happens is they can see what you're doing in your account. Yeah. They say that when they look at certain clients, right, after a while, within the first 2 or 3 months, they know which client is going to make money, which client is going to blow their account. The difference is this. Those that are going to blow their account, right, they do not have this thing called position sizing. Meaning to say, they see a good investment, they will throw everything in a show hand. This comes with a lot about managing your greed, managing your ability to say, wait, I may be wrong sometimes. Being humble enough to say that I may be wrong. Being a bit patient enough, right, to say that I do not need to show hand and bet on everything. Whereas for clients who become successful millionaires, multi-millionaires, right, most of them, they are very careful in position sizing. They make sure that if they lose, they can afford to lose that amount. They don't show hand. They will break their account into a few portions. I think money management is one of the most important skills. One thing I learned is to survive long enough to really understand what's happening. You need to survive long enough. If you blow your account, some people, like Karen, she'll bounce back up. She will say, let's do it again, and then she learn. But some people, they will be so scared of it and they don't do anything anymore. So survive long enough to know what's happening. This is one thing that I learned.
Not only learn from it, but also get back up. A lot of traders, when they blow their accounts, what they do is that they jump to, MLM, because grass is always greener on the other side. They jump to internet marketing, e-commerce. So they jump from one thing to another thing to another thing, and then they become expert in none of those things. So if you want to succeed in one thing, just stick to it, don't give up, and learn from all your lessons. What are the common mistakes that you see beginner investors and aspiring investors always make?
This is what I realized about myself and a lot of beginning investors. We want to make money too fast. Again, some of you may not like me saying this, but it's not about making the money initially. It's about making yourself a very strong investor. Because the thing is this, if you can make money very quickly, but actually you're not very strong investor or trader, right? The money is just maybe a bit of luck, or maybe you did something right, but are you able to duplicate it? So spend the first maybe 1 year, 2 years to make yourself a strong investor, to execute correct trades or execute correct investments rather than chase the money. I can tell you, once you reach a certain stage where you know that you are a strong investor or trader, everything taken away from you, right, you can make it back easily because you have the skills already. Groom yourself to become a strong investor rather than chasing the results.
And do you think that stock investing or stock trading is like a get-rich-quick scheme? Because a lot of people go into stocks because they want to become millionaire overnight. They just want to attend a 2-day course, then they want to become millionaire.
It depends on when you're asking me. When you ask me when I'm just started, right, I will say yes, let's get rich quick, you know. If you feel the same way, I don't blame you if, let's say, you're starting out. Just take it from someone who we have been there, we have done that, we have blown our accounts. If you are able to really ride on the shoulders of giant, right, learn from our mistakes, understand that cannot be get rich quick one. There's no such thing as get rich quick. If there is luck, you can't duplicate it. So you can get rich quick, but you can get poor even quicker. Yeah, so that's my answer to that.
If it's so easy, then everybody will become millionaire.
Yeah, that's right.
Because there are a lot of ways that you can learn investing. You can learn from mentors. You can go to finance school. You can go to Nanyang Business School, like the two of us. Where else? You can go to find Warren Buffett.
Right.
But 1 hour of lunch is how much?
2 million.
2 million.
USD.
2 million for 1 hour. Oh my god. What's the best way to learn investing as a beginner, aspiring investor?
I would say that everyone is a bit different. You know, like there are different learning abilities and techniques, right? Some people, they learn better through reading books. Some people learn better from audio. For me, I'm a bit more kinesthetic. Meaning to say, I need to practice, I see the results, and then I learn from there. You ask me to read and then start to master certain things, I don't learn the best that way. So you must understand yourself how you learn best. Actually, I did that. You can really find someone who knows how to invest already, and then bug that person and say, hey, teach me leh. And if you get a mentor, it's the easiest. I'm not saying that because we are conducting courses. Okay, maybe I'm saying that because we're conducting courses, but I truly believe that when there's someone there to guide you, right, it really makes the journey much easier, you know. Because I read a lot of books. I read like Mary Buffett's books. I read so much of her books, right? By the time I meet her, I feel that I know her books better than her. I can tell her, oh, on this page you're saying what, this formula, how to calculate. I can tell her how she is writing her book. I realized that when I talk to her personally, the nuances, the inspiring stories that she can share with you, personally she can coach you, the things can't be captured into words. Because words is only 7%. So if you have a mentor, you have the 100% of the communication, maybe not even 100, but you get very close to the real message rather than finding other ways. But nowadays got videos, I think it adds on to it. However, you can find someone to guide you, ask questions, trash ideas, that would be the best.
Nothing beats face-to-face conversation. I also agree with that. Sean, what kind of books do you recommend for aspiring investors and also experienced investors so that they can become a very good investor just like you?
My book, I have some books, Gone Fishing with Buffett. This one is very suitable for young investors, and I wrote it in a story form so it's a bit more entertaining. Okay, it tells about a story of how a young guy learns investing from an old man. Some other very notable authors, I would say, Mary Buffett, I really enjoy her books a lot. Peter Lynch, and there's one particular book, if you're a more seasoned investor, I think it helps a lot in psychology, right? It is The Letters of Warren Buffett, which is compiled by Lawrence Cunningham. If you are a trader, right, last time I also used to do quite a bit of trading. I think Alexandra Elder will be one of the very, very good authors, and very, very down to earth, very candid authors. Yep.
In our community, we always talk about trading psychology. Then how about stock investing psychology? What's the best stock investing psychology that an investor should have?
The best psychology that investors, right, like those, the Warren Buffett kind of way, the value investing kind, right, it is a collector's psychology. So if you think of yourself as a collector, let's say you're collecting stamps, or you're collecting, let's say last time maybe during my era you collect those Ming-Sing cards, celebrity cards, Pokemon cards, whatever, like, right? You will go around and then you hunt for the best, and after that, right, you want to collect the best in your collection. When we look for stocks in stock market, it's the same. We go and look at the stock market, and with our limited funds each time, we will see, okay, my $500, which one is the best thing that I can buy so that I can collect? And this guy will so-called be my portfolio. They will work for me for the rest of their lives, you know, for my lives and maybe the next few generations. So have a collector mindset, a lot of things will look different. One interesting thing about investing is, for seasoned investors, right, it's very funny now. We like stock prices to drop. When it drops, right, we can buy things cheaper. We are collectors, so if you find some very rare, painting or what, you want the price to drop so that you can buy in cheaper. That's the way to think about it.
To buy stocks on discount when they are on sale. That's why Sean always goes shopping. You know, shopping.
Yep.
There are many skills that investors should have: money management, fundamental analysis, how to read financial reports. But what would you say is the most important skill that an investor should hone first before they go to focus on other skills?
Just like I mentioned about position sizing, meaning to say money management. I think that one is still the most important to me. You're able to survive long enough, you're able to learn more things before you become really successful. So money management is the first skill. The second skill is really the ability to continue to learn. Being humble to say that the world is still very much bigger out there. Improve on yourself. Yep.
Okay, that's very good. Because a lot of investors and traders, they like to ask, what's the best indicator that you use? As if miraculously, if I give you that, then you go from blowing accounts to
Holy Grail.
Holy Grail. A lot of people are going out there finding a Holy Grail, which I believe doesn't exist. I believe that Warren Buffett doesn't have a perfect system also, just that he has very good psychology also.
Right.
money management. What kind of stocks platform or broker would you recommend the aspiring investors?
It depends on what kind of vehicles you want to invest in or trade in, right? For me, right, last time I used to use more like Singapore brokerages because I focus in Singapore stocks. Then I continue to use US discount brokerages like TD Ameritrade, Options Express. Recently, I swapped to Legion Trader, which is a white label of interactive brokers. Interactive brokers, I'm beginning to like it more and more. It's not very like user friendly initially, but one thing it allows you to do is it exposes you to almost every stocks in the world, you know. So you can buy stocks from Japan, from Hong Kong, anywhere you want. So I become a worldwide collector. Last time I only collect Singapore, US stocks. So currently it's interactive broker, and the brokerage fee is one of the cheapest.
Then what do you think are the criteria that you need to look at to choose a broker? Because Forex, there are a lot of scam brokers. They pull your price to the stop loss. So what do you think are some of the criteria to look at?
Choosing brokerage is like choosing a stock, you know. You look at the track records, how reputable they are. One thing that I find that is quite important is when you look at the brokerage, right, see whether there's insurance. TD Ameritrade, interactive brokers, every account that you open, right, they insure it up to maybe $500,000. So in case they close down, right, you still can get back $500,000. And yeah, correct. So every time you hit more than $500,000, you can open a secondary account. You can open up 10 accounts, then they will all be insured. One more thing is, where are they holding your funds? Interactive brokers, right? My stocks and my funds are held in the bank, a custody bank, not held by the broker. For stocks is more straightforward, right? One more thing is this, there are some brokerage firms that close down. The reason why they close down is because they use your funds to go and invest. Last time, some brokers that closed down because of that. So try to go for independent brokerages. They don't use your funds, they just do brokerage, they get a commission. That's their main business. That will be the safest, I would think.
What are the ratios, financial ratios that you look at first?
Key three things. I just share three key things. The first one is profits. Because when I buy a business, the main thing is I want them to make money for me, you see. So I look at the past profits to see whether is it consistent. The second thing I look at is the cash. Some people, they can record profits, but there's no cash, you see. So the cash must be also as stable as the profits, must be coming in very constantly. And the last one is the debt. Meaning to say, I don't want a company that borrows too much. Borrowing a bit is okay because they can borrow, then they can expand faster, right? But if they borrow too much, right, it'll be very scary. So debt to equity ratio, or use different indicators for different kind of stocks. But you want a debt to be relatively not as high. Yep.
That's what my professors taught me too. So Sean sum it up. And also the other thing is that my professors taught me about don't look into financial and aviation stocks because they are way too complex. If you want to start as an aspiring investor, go into easier types of stocks like energy, commodities. So what do you think about this?
It's true to a certain extent, and it goes back to this idea Warren Buffett called it the circle of competence. It depends what you're competent in. To that professor, financial stock may be very complicated, but maybe to you are born in a house of bankers, your parents talk about financials every day. Maybe it's very easy peasy to you. Who knows you're the son of Wee Chow Yao? Then the key thing is don't go into things that is complicated to you. Because whatever that's simple to you may be complicated to other people, you see. Maybe biotech is very simple to you. It may be complicated to me. To me, maybe like insurance is becoming a little bit more easier for me because I read more into it. Oil and gas, I didn't used to know, but as I study more, I begin to understand more. So as a beginner, understand where you are spending money, where is your circle of competence, where are you working in, which industry. These are the best places to get started usually.
Let's say Singaporean stock investors, should they buy US stocks or Singapore-based stocks?
Assuming if every country is growing about the same rate, the valuation is the same, equally cheap, there's more advantage for you to invest in your own local stock because there's less foreign exchange rates. You know the local market better than any other foreign investors, you see. So if you can invest in Singapore stocks, assuming that it is equal with other countries, then you should invest locally. The unfortunate thing is, I love Singapore and I love my country. It's just that if we are going to be very realistic about things, right, the ability to grow a lot more than other countries is not going to be very high. So to face the fact that Singapore has hit a certain mature stage, we are a developed country. We call ourselves developing, but we know that we are pretty much developed. How much more can we grow? Now, when you put your money in that country, right, the growth rate does affect how fast your money grow. So will you want to put your money all into Singapore? I think you should still put some in Singapore where you get really very stable dividends. You ask yourself, which industry or which country will be 2 times bigger? Okay, in maybe 3 or 5 years' time. I don't think Singapore's GDP will grow times 2, you know. But if you look at maybe Vietnam, you look at Cambodia, all these emerging countries, right? Even you look at, let's say, China, right? I think the chance of them growing much more, right, is higher. So these are the countries we can start to look at. The next one is which sectors? I gave a talk recently about the 4th industrial revolution. Computer is the third industrial revolution, but you can see that robotics, AI, blockchain, they will be the future. Just like last time, second industrial revolution where Henry Ford creates cars, when they see cars, they see planes, they say it's just a dream, it will never happen. But now it becomes something that's everywhere. If you have invested back then, right, you will become ultra rich, seriously. So now look into industries that will be growing very fast. I'm not saying put all your money inside there, but at least place a bit there. Now you just need the one of them to become the next Alibaba, right? You also become very rich, right? So that's the idea.
What are the average returns that the average investors should aim for? Is it 10% or is it all the way up to 50%? Some people aim for 100%. So what do you think?
I want to share, right, last time Warren Buffett used to aim about 15%. He wrote that in his letters to his shareholders. I always want to aim for 15%, 20%. But now, right, I want to aim to do more correct investments rather than the results. I share with you this because like in my earlier days, right, and some of my other investing friends, my students, they aim for a certain percentage every month, every year. And sometimes in order to hit that percentage, right, they force themselves to invest in some weird stocks sometimes. So it may be a bit different from trading because trading, the whole setup is a bit different. But for investing, right, sometimes if you cannot get a certain percentage, you just have to don't get that percentage. Just go for a correct investment rather than that. When you do correct investment, sometimes your result will shock you. Like Warren Buffett now, you look back, he's making about 20% depending on when you measure it. But in his earlier days, right, based on what I read, he's making like 50 to 60%. Yeah, based on your risk appetite, you must know yourself very well.
Basically, know your investing personality. Any stock tips for 2018 or 2019?
I always look at valuation. There are a lot of stocks, but none of them are cheap. The cheaper ones now will be in China. China, they just devaluated their yuan, they're fighting with Donald Trump. Their stocks are really very cheap. The thing is this, you must ask yourself whether are you a collector like myself. In my opinion, China really has a lot of very strong yet cheap stocks. The concern people has is, are they trustworthy or not? They are financial zone or not? One thing that I won't say recommend, but you can look into China ETFs, because ETFs, you're just buying into the whole China. That one will be one idea that I look at. Another sector that I look at, instead of individual stocks, will be oil and gas. So oil and gas, if you look at the top few, right, like Exxon, in my opinion, bottom up already. But even if they don't they don't go up, right, very unlikely to go down, the oil price. So these are the two probably more safer havens to go into. Yep.
Sean, do you focus more on low cap stocks, mid cap stocks, or large cap?
My portfolio consists of a few portions. A stock's growth cycle, they start from small caps, or they start from startup, then successful become small caps, growth phase become mid cap, then mature already become big cap, then cannot grow already. I feel that our investment portfolio should have a few portion. One portion, you should have the big cap stock just for dividends. These are stocks that very safe, you don't need to worry too much, they give you dividends, cash flow, but you don't expect them to double or triple already. Probably for dividends, depending on if you're going to retire soon, more should be put into large cap, stable stocks. Actually, the size of the stocks doesn't really affect me that much. It is more of their potential to grow. There are some large cap stocks, in my opinion, have potential to grow. Example, in my opinion, maybe Visa. Now there's quite a bit of competition, but in my opinion, payment gateways have a lot of potential to grow. So although they are large cap, they still can grow. Okay, so it depends on the purpose you buy them for. And then if it's for dividends, certain portion should be dividends. If it's for growth, look at those that can grow. For growth, typically small caps can have higher potential to grow. So this is how you do it.
Okay, Sean, so how can our local followers and also overseas followers who are watching this, how can they reach out to you? How can they learn more from you? How can they consume your content? Or maybe meet you in person, live in your seminars?
You can follow me on Facebook. You can search for Sean Seah. Hopefully it's the real one. Nowadays there are a lot of fake profiles, but I'll share this video as well so that you guys know it's from the correct profile. And I will be posting like more information, more videos that we'll be doing, and also give some updates on my events. Do come and meet me live. I mean, it's fun to share on video, but nothing beats like meeting each other face to face and really sharing ideas together. Yep. So follow me on Facebook, Sean Seah, or Instagram, Invest with Sean Seah, or YouTube, Sean Seah TV. Cool.
Down in the description below so that you can go check it out. Alright. If you want more of Sean Seah, let me know down in the comment section below too. Then I'll hopefully do a second round interview with him. So with that, I'm Karen Fu, this is Sean Seah, and I'll talk to you in the next episode. Bye.